Welcome to the latest Motley Fool scoreboard. I'm on in Chocobaloo. We've got longtime fools Jason Hall and Tyler Crow giving a 1 to 10 rating to a home builder, LGI Homes, ticker symbol LGIH. First, we'll rate the strength of the business, keeping in mind factors like industry and competition. A 10 is invincible, a 1 is hopeless. Both Tyler and Jason have given LGI a 7. Tyler, let's start with you.
Well, I think LGI, in terms of strategy relative to the home builders, it has a good one. It focuses on first-time buyers, and it's kind of built its entire operations and marketing system around this concept. They use like cookie cutter designs and not a lot of customization versus some of the larger builders. They do like mailers to renters as a marketing thing that, where they emphasize price points for mortgage expenses that are similar to local rent rates. And that kind of, helps push people into that first time purchase. It's had some execution issues during the pandemic. Home builders have to like work on pacing it, to really make it work over a long time. And they sold a little too fast and didn't have enough of a development pipeline to backfill it. I think it's fixing that right now, and it should be back on a growth trajectory in the next 6 to 12 months.
Yeah, I can't really add much to what Tyler said. We came down to the same score. We both followed this company in the industry for years. Its go-to-market strategy is solid. In there's a lot of tailwinds for the housing market that are behind the reason I gave it that score of a 7 as well. You'll hear more about the warts as we get into it.
The top segment is going to be especially key here, given the rising tide of the home building space. Let's talk management. 10 is Warren Buffett. A 1 is Homer Simpson. Tyler had a 7. Jason had a 6.5, just slightly under. Let's start with the low score, Jason.
Yeah, I could make the case for going higher or lower here. Operationally, it seems like they could have done a better job over the past few years. Selling all of your inventory, that's a great problem to have, but they certainly didn't pace well, as Tyler said. And I think as a result, in more recent years, they probably got outcompeted on some land and weren't able to build up their land bank enough. As they've acquired enough land to really get that pipeline built out, I think the business is now a little exposed. They've had to take on a lot of debt. It's really leveraged. And that leaves it a little bit exposed if something does happen to undermine new home demand. If the cycle turns quickly, things can get ugly quickly.
Yeah, I've said it, I think, before on other things. You don't have to be a genius to be a CEO for a home builder these days, considering the profitability and the kind of the industry dynamics. But it's a founder-led business. Eric Lepar has been there since the 90s and kind of started out in development. He helped found LGI Homes. I took some points off because they sort of flubbed the COVID market, as we've discussed. But like I said, selling homes too quickly and not having the land to back it up, there's worse problems, right?
Yeah, too much inventory is the bigger issue we run into with home builders over cycles. Financials, a 10 is a fortress, a 1 is yikes. Both of you had a 6. We'll start with Tyler.
So yeah, I said 6, and this is kind of like, if I were in a vacuum, I would actually have scored it much lower because it does have a relatively high debt to capital ratio for home builders in general. And and overall, it has about a debt to capital ratio of 43%. But I'm giving it a little bit of grace because, like we said, it has a lot of development going on because it oversold during COVID, right? And it has a lot of unproductive assets that are about to go live in the next few months. Right now, it has about 128 active communities for being sold. Earlier in the year, it was less than 100. And by the end of the year, they expect to have 150 active communities where they're selling homes. So there's been a big uptick in total communities, which, should bring down that leverage.
Call me Charlie here. I really don't have much to add.
All right, Charlie. Let's talk about valuation. How well will LGI Homes stock do over the next 5 years? And how safe is it, keeping in mind a 10 is a sure thing and a 1 is a lottery ticket?
It's not totally binary, but I think of the home builders that I follow and own, it's probably the most binary. Like Tyler said, that leverage that they've had to take on to acquire this land should probably be a non-issue in a couple of years with active communities about to come online. And I think the tailwinds will remain very strong. And LGI is positioned to do really well. So I think potentially 15+% returns over the next 5 years. Safety score is only a 5 though, because that balance sheet risk of the cycle turns, instead of the tailwinds being supportive, that leverage could really create a lot of problems.
So I gave a 10 to 15% with a safety score of 6. Like I said, the expected community count over the next few months implies 25% growth over the next 12 months, and it has another 18,000 lots under development. Its peak sales in 2021 were 10,000, so the development pipeline is quite robust, and it kind of implies some rather significant growth. As for safety, this is a cyclical industry, like Jason said, and I do like, if we're underwriting investments, want to be conservative. And there's also like political pressures in home building these days to address housing prices through zoning relaxation or relaxing zoning laws and some other supply side policies that could lower average sales prices for houses and in turn contract margins for home builders.
The $1 million McMansion question, Jason. Is there a company in LGI home space that you like better?
There's actually a lot, but I'll highlight one that should be familiar to Fool members. Meritage Homes, long-term recommendation stock advisor. It's been a winner, exceptionally well-run for many years. Steve Hilton is the executive chairman now, founder of the business, was the CEO for a long time, has done an incredible job of getting the company ahead of the trends. That's so important. Again, LGI's potentially at risk because it fell behind and wasn't positioned well. Also, LGI trades for about 8 times earnings. It's one of the smaller top 10 builders. So I think there's a good bit of growth in its future as well.
I own LGI and I like a lot of companies in the industry. I think Green Brick Partners is one of the best underwriters in the business. It's one that I own as well and I really like. And I'm really intrigued by Lennar's recent move to spin off its land or announcement to spin off its land development into a REIT and become this just-in-time land strategy business. It's really intriguing. I want to see where it goes.
Thanks to both Tyler and to Jason. They've given LGI Homes a decent overall score of 6.8 out of 10. Short of that 8.0 that would force me to own shares, they're pushing for maybe doing a few of the other home builders in the future. So stay tuned for that and look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is something in the energy space. Till then, Fool on.
If you're making the perfect argument, I'm not going to really add much.
You mustn't have a lot to say this time because I always make perfect arguments, Jason.
You're so perfect, Tyler.